Looking at FHA loans today. I'm actually working on a pre-approval for an FHA loan. Yeah, this is kind of fun. It's all backwards in the picture there, but I'm working on FHA loan. And as I'm doing the pre-approval right now, I can't help but think about FHA loans and how to use them as a strategic choice for you when you're making offers on your home. You see, the FHA loan has some tremendous advantages for especially the first-time home buyer. Not only can they be used in conjunction with grants and other things like that, but the FHA loan actually is very credit flexible. Now, you can go down to 580, many times below that. Most lenders would prefer to actually go higher than that at a 620. Once you get up to that 620 credit score, in essence, you're at a place where the flexibility in the credit is such to where you're starting to see some improvement in terms. And most lenders are quite comfortable working at above the 620. When you get below that 620, it doesn't mean that you can't buy a home as far as with the FHA loan. What it does mean, though, is that there's a lot of extra restrictions that get added to you. One of the big things that you just need to know of with these conventional versus FHA is that right now we're going into a season where FHA is going to be significantly more attractive to the consumer as they get ready to strategically buy this house. The FHA loan right now is almost a full percentage point interest rate wise better than the conventional loan. And with where interest rates are right now, that's actually not a bad move. Now, there's a few things that you need to be aware of with FHA versus conventional, because the FHA does carry the mortgage insurance for the life of the loan. So obviously, you don't necessarily want to keep it forever. But with where interest rates are right now, you're likely going to refinance anyway. So this isn't necessarily something that's a big deal. Now, where it becomes a strategic disadvantage is right now the marketplace kind of poo-poos the FHA loan because they see it as unstable, primarily because we are working with lower credit. We are generally speaking with lower credit and also with lower down payments. But here's what you need to know with that is it is a government-backed loan. And as long as the pre-approval is done correctly, most of the time it's no different than buying with a conventional loan. So strategically, how would you present this to the seller if you're in a competitive situation against conventional loans that have the perception of being a higher quality loan? Well, that's a great question. The first one is the safety behind it is actually government backed. So that's what the mortgage insurance is actually doing, is it's backing you up and saying that they're going to be carrying the risk at the same point in time with you in order to be able to make this whole loan thing work out. The next piece that's actually pretty important as you put this together is most of the agents or real estate agents, when they're presenting this to the seller, they're concerned about what's called the amendatory clause. Now, the amendatory clause is a clause that's in the contract that, in essence, what it's saying is that the buyer, if the home doesn't appraise, has the right to get out of it. And also, if there are condition factors in the house that need to be fixed, that you, as a seller, need to go ahead and fix them. Well, you're kind of limiting your pool of good buyers when you take that mindset, because the conventional loan really has the same restrictions as the FHA when it comes to that. FHA does have a slightly higher regard in those areas, but you're really limiting your pool of somebody who could be a tremendous buyer, who could be making a tremendous offer on your home if you don't accept the FHA loan or you reject it just because merely it's FHA. You need to be asking a few more questions when it comes to this, because the risk associated with an FHA loan compared to a conventional loan is perceptual only. Because if the loan officer has done the correct detail, and by correct detail, it means that they've looked at credit, they've looked at income, and they've looked at your assets, which is the same thing whether you're a first-time home buyer with a conventional loan or with an FHA loan. It doesn't really matter. Either one of those, you're going to have to look at credit, income, and assets. If you have all those and been looking at those at the same point in time, what you're going to be finding is that it's all about the quality of the pre-approval. The quality of the pre-approval, that's where things fall apart. Whether your loan officer did the hard work up front to verify income, verify credit, and to verify assets. That's where it's all at. So having said that, the amendatory clause is important. The condition of the home is important. It's really looked at from both standpoints. I mean, think about it. How would a bank, if you were the bank and you were looking at lending somebody $300,000 to $400,000 to buy a home, would you be interested in making sure that that home was in good shape? The answer is, yeah, you're putting $400,000 at risk. You want to make sure that that's in good shape. So as far as from the seller's perspective, it's really going to come down to this. Now, here's a couple tips and tricks to make sure that FHA wise, if you're going to be presented with an FHA, you present it correctly to the seller. Tip number one, verify that the loan officer has done the hard work of verifying credit, income, and assets. In other words, that you provided them with the pay stubs, that you provided them with employment history. We have a full credit report. We've reviewed the credit report, made sure that there's nothing that's going to trip us up, and that we've also verified that you have the cash to be able to make this work. Okay, that's number one. Now, number two, Freddie Mac, Fannie Mae, Ginnie Mae, which are all the government entities that govern the loans, they have an automated underwriting system that we need to use to verify that all the data points that we put into your file actually corroborate the approval. This automated one is not perfect, but usually you can't get a loan without getting some form of approval from Freddie Mac, Fannie Mae, or Ginnie Mae through the automated underwriting system. So it's extremely important that, number one, that they've done the pre-approval correctly, but second of all, that they've run it through the automated underwriting systems. Once they've done all that, that can set you up for success and strategically set you up. Now, the third one is just a perceptual one, that the appraisal and the condition of the home isn't necessarily that's going to be a problem for you, because the FHA sends out a separate document called the amendatory clause, making sure that everybody has the knowledge that if it doesn't appraise and the condition isn't right, that you're not buying the house. Okay, but your contract for real estate also has that in there. So understanding how to present this to the selling agent is really the strategic choice in this market. FHA is going to be very important going forward, and it's going to be very important that you know how to present it. Anyway, Chris Parks here, Atlantic Coast Mortgage. Please subscribe if you like the information. Please send me a thumbs up if you like it. And I'm never too busy for you or your referrals. Thank you for the opportunity to serve you and your family.